Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. I have a singular big picture item here on this daily chart that is nearly 2 years old. It is the big June to October 2022 bear channel, currently 217 to well off the bottom of my daily chart. This bear channel is highlighted in dark blue on my daily chart and originates from June and October 2022. It's only since mid-April that we have seen it broken on the upside. Since the low in early March, the market has staged a gapping move higher, admittedly due to changeover, but still a gapping move higher that has risen up through the short medium moving average, currently 226. Hesitated around the medium moving average, currently at 219, enough to form a combined descending triangle and bullish halfway hesitation, and follow up through the 50% Fibonacci line at 219, and the dark blue highlighted upper bear channel line, currently at 212 of that long time bear channel. Prices moved further up over the long moving average, currently at 228, hesitated for a short while at the neckline extension of the June to November 2023 head and shoulders top, currently at 235, before breaking up through and to the congestion between 252 to 255, containing the 2013 high at 254 and utilizing the congestion as a support rather than as a resistance. Moving up through the 258-260 congestion, containing the 213 high at 254 and utilizing that congestion support rather than resistance, and moving up through the 250 further the 20 before coming to the latest overhead congestion between 267 to 270, where we are currently being capped. In the process, the market has created a very steep, acute, late April to date bull channel, currently 263 to 289. Okay, so let's now go back a bit to that break of the big bear channel. A primary target X for the move higher is in the 277 area, with a secondary, harder to reach target X1 up in the 312 area, up off the top of my daily chart right now. So what stands in the way? Well, the current resistance of 267-270 is quite reasonable and quite congested. Beyond that, we have the 2012 high at 279, then the neckline extension to the October 2021 to December 2022, October to December 2021 head and shoulders top. It's a small one but relevant, that's currently at 293. Next, a series of 50% Fibonacci lines. The September 2019 to May 2022 move at 302, the August 2020 to May 2022 move at 307, and the March 21 to May 22 move at 313. We shall see how far the market makes it. If it is just to target X, or further, or not at all. Minneapolis wheat. Back in late February 2023, and especially at the start of April last year, so that's actually now outside the parameters of my daily chart, the market constructed a large bear channel that morphed into what is now highlighted in dark blue on my daily chart, a descending expanding wedge pattern, currently 734 to down well off the bottom of my daily chart. The upper trend line is currently escorted and reinforced and has been for some time, though not very well recently, I have to say, by the declining long moving average, currently at 719. Going back a bit to early December last year, the short medium moving average, currently at 684, started capping prices. In truth, this moving average had been an effective cap in the market since mid-October 2023, not tested but effective nonetheless. However, on the 22nd of April, after some base building since late February, the market broke higher over the short medium moving average as well as the medium moving average, currently at 684, and some other significant resistance in the band between 693 to 708. In this band we had also two other patterns I'd spotted earlier, nestling like Russian dolls one within another. 29 weeks ago I said the following of the first pattern, I quote, "It is the nascent late August to date bear channel highlighted in bright red on my daily chart, currently 675 to well off the bottom of my daily chart. This pattern is still operational, and once again I note how we have a smaller bear pattern nestling within a much larger one, much like a Russian doll, end of quote. The second pattern is highlighted in purple on my daily chart is the October 2023 to late April bear channel, currently 584 to 681. This one had seen some market touches. This one likewise was also broken. Prices 2 weeks ago exited up and out of the 693-708 congestion band, creating a steep, acute, late April to date bull channel, currently 744 to 782, highlighted in bright red on my daily chart. Last time I said the following when I quote, I would expect the long moving average and a dark blue upper trend line to be tested and soon. Should the testing break both the moving average and the trend line, then we'll have to start considering topside targets for all the descending wedge patterns and all the bear channels. The market has broken, end of quote. It is that time now, so here goes. The big dark blue expanding wedge pattern, we have a primary target X in the 878 area and a harder to reach secondary target X1 in the 928 area, which is off the top of my daily chart. For the bright red bear channel, we would have a primary target X2 in the 777 area, with a secondary harder to reach target X3 in the 820 area. For the purple bear channel, we have a primary target in the 745 area, which has already been achieved, and the secondary hard to reach target X4 in the 768 area. I'll just let that all sink in for a moment, and please play it back again if you want to hear those numbers. After letting it sink for a moment, then maybe next time we can discuss the obstacles in the way preventing the market reaching those harder primary and secondary targets. London UK feed week. One of the key features here on my daily chart, and it's a surprising feature, has been and is the extension of the neckline of the May to June 2023 reverse head and shoulders bottom, currently 191 3/4, which is highlighted in dark blue on my daily chart. It's actually not a very big reverse head and shoulders bottom, but it is important. Originally, this was not a very notable pattern, a mini reverse head and shoulders pattern, if you will, but the extension of the neckline first acted as a pretty reasonable support and then later as an additional resistance, though I suspect in the background the September 2021 lower at 181.70, perhaps more importantly, the 50% absolute Fibonacci line at 180.5 had helped in the past to prop up prices. And now this year, in late April, however briefly, to cap prices. More recently, we have seen a double bottom during February and March, and prices have moved back up through the old congestion from March to April 2019 between 161.95 to 165 3/4, as well as through the July 2021 and May 2023 lows, both at 164 even, and the August 2020 low at 161 even, and reaching the target area for the pattern in the 170 region. We then had some hesitation under and around the medium moving average, currently at 172 even. This medium moving average had been an effective cap for the market since about late 2023, becoming more significant as we headed into December 2023. 5 weeks ago, I posed this question, I quote, "The question now is what this hesitation we are seeing under and around the medium moving average, what will it become? Will it be a capping and topping action or a halfway hesitation for a move higher? Or as I noted last week, does it have elements of a small sideways triangle?" End of quote. Back then, it was too early to say, but over time it became an ascending triangle, highlighted in bright red on my daily chart. From this pattern, prices punched up higher, through the top of the pattern and the medium moving average on the 22nd of April, reaching both the primary and secondary targets above. But then the market came into contact not only with the 50% absolute Fibonacci line and the September 2021 low, but also with the declining long moving average, currently at 179.35. At the end of the first week of May, prices punched up through all three of these, establishing itself over them all. This left just a dark blue neckline, or rather, the dark blue neckline that is over a band of congestion formed between roughly late August 2023 to early January 2024, between about 183 even to 189. I said 3 weeks ago, and I quote, "I'm not sure how good this band of congestion really is, and I'm also not sure how good the dark blue neckline is as a resistance, without the help of the 50% absolute Fibonacci line in the September 2021 low. But having come so far, it would be wasteful to not look further higher. Thus, looking at the triangle as a potential halfway hesitation, we could see a potential up as far as just under the neckline and above the 183, 189 congestion, up in the 190 and 3/4 area, end of quote. Prices made a false but significant break higher late last week, but this week have made a truer break upwards, up to the August 2021 high at 199.20. Now I said just now how last week's break was false but significant. The reason why is because it helped define an early March to date bull channel, currently 188.30 to 280, 200.80. And though it was part of a weekly key reversal down, this week's actions have justified that false break. So what have we in the way ahead? Well, we stopped at the August 2021 high today, and not a special high, but then the market hasn't been up here since August 2023. We have congestion now at the March 2013 high at 205.05, the 2022 low at 206.5, and the 2013 high at 215 even. But to be honest, none of these jump out to me as being immediately significant. Perhaps the congestion at 217 area, around the July 2023 high and the double top Adam and Eve type, perhaps there might be a better resistance. I will keep you updated on that. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.